Good afternoon, ladies and gentlemen, and welcome to the BREEDON Group PLC annual results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time just using the Q&A tab situated on the right-hand corner of your screen. Simply type in your question at any time and press send. The company may not be in a position to answer every question it receives during the meeting. However, the company can review all questions submitted today and we'll publish the responses where it's appropriate to do so. Before we begin, we'd like to submit the following poll, and I'm sure the company will be most grateful for your participation. I'd now like to hand over to CEO Rob Wood. Good afternoon.
Thank you very much, and good afternoon, everyone, and thank you for joining us here this afternoon. I thought before we go and start talking about our annual results for 2024, I would take the opportunity just to remind you about BREEDON Group and a bit of our history. We were formed, and our first transaction was in 2010, and we were in the UK, and we were construction materials. Since 2010, we've grown both organically and through acquisition to build out a vertically integrated construction materials business, not only in the UK or GB, but also in 2018, we expanded into Ireland, and so therefore had two platforms. And just over 12 months ago, we expanded into the US and into the Midwest in Missouri. And so we now have three platforms. We now employ approximately 5,000 colleagues, and we're focused on growing the business organically and through acquisition across our three platforms. I just thought that was useful background for all of you. If I turn to our annual results, what I'd like to say is that we're really pleased with what we've delivered in 2024. There were really quite challenging headwinds in our home market, GB. There was political and economic instability across all three of our platforms, and political wise, there were elections in all three platforms over the last few months. And there were some poor weather conditions that impacted different platforms at different times of the year. But overall, Team BREEDON, stepped up, faced those challenges head on, and delivered what we considered to be a strong set of results, which were just slightly ahead of market expectations. But as well as the numbers, we also achieved some other things, and we delivered some results, which were sort of in parallel to some of the strategic progress we made. And I think what I'd call out to here was, our announcement back in March 2024 of BMC, which was our beachhead in the US, had followed a couple of years of us doing due diligence and talking to investors about exploring an entry into a third platform. And I'm really pleased. That was a big landmark transaction for us and gave us our big beachhead in the US. But in parallel to that, we made significant progress on our sustainability priorities and upgraded our targets going forward. And James also refreshed our financial framework, which he will come on and talk about separately. But all those three subjects were front and center to the capital markets event we hosted in November. And I hope if you haven't done already, you find the opportunity to go back and look at those slides and watch the video from the day, because I think that really explains why we've entered the US and why it was so compelling. So in summary, a strong set of results in some challenging markets, but some real strategic progress. And I think on that note, I'd like to pass over to James.
Thank you, Rob, and good afternoon, everyone. I think the thing that really strikes me when I look back at the 2024 results is just how balanced they were. We successfully grew our revenue, we grew our EBITDA, and indeed we expanded our margin, helped in no small measure by that initial contribution from BMC coming into the group for the first time. But alongside that, we generated significant levels of free cash flow. We improved our cash conversion, and we've continued to invest back into the business. And I often talk about how at BREEDON we see investment as a differentiator, and we see the investment that we make today as underpinning our success in the future. We reduced our leverage over the course of the year to 1.4 times from its half-year peak of 1.6 times. And that in turn gave us the balance sheet capacity and firepower to acquire the Lionmark business off the balance sheet using our existing facilities. If there was a disappointment, it was perhaps in our return on invested capital in the year, which came in at 9%, down from 9.9% at the end of 2023. But there are really three significant components to that fall. The first being the increase that we've seen in our corporate tax rate. The second being BMC only being consolidated for a stub period of the year. And then finally, the trading volume decline that we saw in our British business. We remain confident that as markets return and as volumes grow, that we will see an expansion of that ROIC back towards 10%, which is the threshold target that we have established. We also grew our dividend in the year by some 7% to 14.5 pence. And since we first started paying a dividend back in 2021, we've paid out over £160 million in dividend distributions to shareholders. So it's been pleasing to be able to continue on that progressive dividend track. Looking at the divisional EBITDA contributions, you can see that in Great Britain, despite the volume declines that we saw in the year, the margin fall was restricted to 20 basis points, which for a business that has an incremental drop through of closer to 20% really demonstrates the success that the division deployed in terms of its cost management and cost mitigation through the year. Our Irish business saw an expansion in its margin to 17.8%, reflecting investment made back into the business, tight cost control, and a much more structured approach to tendering across the island of Ireland. And there's that encouraging initial contribution from the US business, as well as further margin expansion seen in our cement business. And all of that led to the group margin improving by nearly 80 basis points to 17.1%, compared with a threshold target EBITDA margin of 17.5%. I'd now like to hand over to Rob to talk a little bit more about the Lionmark acquisition.
Thanks, James. We were really pleased to announce the acquisition of Lionmark last week. When we started our journey just over 12 months ago in the US, in BMC, we did have our beachhead. It was in an attractive market in the Midwest, which was ready for consolidation. It came with a really high quality management team. But if there was a negative, it would be potentially that it was overexposed through its ready-mix concrete to the residential sector. And our desire as BREEDON is to have vertically integrated businesses with a majority exposure to infrastructure and roads. And I think Lionmark couldn't have been a neater fit. It builds us out into asphalt and surfacing, contains further acquisitions to expand our geographical footprints, aggregates to expand our geographical footprint. And what it does overnight, and if I just move forward a slide or two, that one back. What it does, if you look at those pie charts in the middle, you'll see our overexposure to residential pre-Lionmark and then post-Lionmark, where the majority is now through to infrastructure and roads. So really quite, from an end use point of view, very good. I think what I would then stress is, I'm losing control of the slides here. So it's really what it's got, and it is a leading regional construction and surfacing business. It's headquartered in Missouri. I mean, literally, the head office is only 10 or 15 minutes away from our BMC head office. It has a strong track record of organic growth and has an ambitious and culturally aligned management team. And as I said, just when I started, it really does vertically integrate our business. But it does come with more. It's got over 100 million tons of reserves and resources, across 8 quarries, 4 asphalt plants and has a bitumen terminal, and increases our exposure to infrastructure and positions us to benefit from the construction growth that is expected and we expect in the Midwest in the medium term. I won't dwell on this slide, but I think this gives you some of the forward projections and just why it is an attractive acquisition and why it is an attractive market. But what I would say is, in summary, we're really pleased. Overnight, we now have a vertically integrated business in the Midwest, a real beachhead to build out from. And James and I and the board and the team in the US are very excited about building that business further. And I think I'll pass back over to James now just to give you some financial highlights.
So in Lionmark, we're buying another really good Midwest infrastructure-based business. At an enterprise value of $238 million, a multiple paid of 7.7 times 2024 EBITDA. And that's inside the multiple that we paid for the BMC transaction a year ago, and is in line with, if not ahead of, comparable transactions paid for in the US construction materials market in recent years. The vendors are taking around 5% of the consideration in BREEDON equity, and they've undertaken to hold those for at least 12 months. Coming into this year, the business has a backlog of over $210 million, which compares with a revenue delivered in 2024 of around $246 million. And it generates an EBITDA margin of 12.6%, which we would hope to be in a position to expand in future years. How we're going to go about doing that is in part through generation of synergy benefits, and we've identified $3 million of synergy benefits that will come through over the course of the next 3 years. We will need to make some investment back into the business in the first year of ownership, but there will be other opportunities, particularly around vertical integration and cross-selling of materials between the Lionmark and BMC businesses over the course of the next few years. We've already completed on the transaction, so the business will now be consolidated by BREEDON over the course of the next 10 months.
And I think, in summary, I think that's it. Really, really pleased with the strong performance in 2024. Really pleased to be able to announce Lionmark and just what a good fit it is for our US business. And whilst there are some challenges ahead, particularly in the UK, we're excited about the future as BREEDON. It's probably an appropriate time now to open it up for questions then.
That's great, Rob, James, thank you very much indeed for updating investors. Ladies and gentlemen, please do continue to submit your questions just using the Q&A tab situated on the right-hand corner of your screen. Rob, James, we've had a number of questions from investors this afternoon, so thank you to everybody for your engagement. Perhaps I could start with the first one, which we received ahead of today's event. The Ireland division is described as strong in 2024, and there was a nice step up in EBITDA and margin, but revenue in the Ireland division had been flat for 4 years. What is holding back revenue?
I think if you unpick the Irish business and the Irish performance, we did see a really encouraging improvement both to the EBITDA and to the margin in the course of 2024. In part, that was down to exceptionally good cost control. But another big component of that was us taking a very structured approach to our tendering process in Ireland and not being afraid to walk away from projects that were less economic for BREEDON. So that in turn has meant that we have turned down revenue opportunities where we felt that the margin was insufficient to cover the risk and the investment involved. Within the Irish business as well, we've seen a significant increase in the amount of aggregate sales that we make from that business, reflecting the transformation that has been wrought on the Irish business since the acquisition of Lagan back in 2018, when the business was pretty much exclusively a surfacing business.
That's great, thank you. The other pre-submitted question we had was around share price. Rob and James, is there anything that they can do differently in the future to increase the share price, which has been slightly lagging behind?
Well, I'll start that one, and James will probably add to it. But I mean, I think the most important thing we can do is keep delivering and control the things that are under our control. There's been a lot of macroeconomic influences on not only our share price but London share prices as well, and we're not directly able to influence those. And when we speak to our major investors, I mean, what they've always told to do is to focus on the things we can control and focus on improving the business.
Yeah, and I think what I would add to that is that really over the course of the last 12 months, the share price has moved forward really quite materially. And since the announcement of our results last week, the share price has made further strides forward. So I think that we remain very focused as a management team. The top team within the company are very incentivized and motivated to move the share price forward, and we will continue to do our best to ensure that our results and our performance are appropriately communicated to the market.
That's great, thank you. Let's turn to the next question. How are you positioned to capture opportunities from the UK government's infrastructure spending plans?
I think we have a well-populated sort of geographical footprint to be able to benefit. When it comes to infrastructure, I mean, if you look at roads and take that as one part of it, I mean, we have relationships with National Highways on the Northern Super region. We have relationships up in Scotland with Transport Scotland. And so we're well placed to benefit from spending on the road network. I think what's clear, though, is that, RIS3, which is the next 5-year spending programme for roads, is unlikely to have a lot of new capital projects in. It's likely to be much more maintenance focused. And one of the few capital projects that was still in it was the A303, which was the tunnel under Stonehenge. The new government scrapped that new road, literally quite shortly after they came into power last year. But we shouldn't be disappointed. If it's maintenance spending, it tends to be asphalt and the laying of asphalt. And it tends to be that our industry, and therefore BREEDON, gets to share more meaningfully in the pot, as opposed to capital projects. And also maintenance spending can be actually mobilised relatively quickly. Capital projects often take years to move from an idea through to a project. Outside of roads, there's a number of infrastructure projects that are required, whether it's water, whether it's electricity, whether it's hospitals. All of them will be good. Spending on them will be good for the heavy construction materials industry, and BREEDON should benefit from such spending.
Thanks so much indeed. You recently announced, and I know you've just touched on this, the Lionmark acquisition. How does this fit into your US expansion strategy, and what synergies do you expect?
I think, as I touched on earlier, we bought a really good business in Lionmark, and I think there are a number of particular features about this acquisition that are very relevant in the context of us establishing our US platform. The first of those is just how local it is to the existing BMC business. Both businesses headquartered in St. Louis, Missouri, and both very well known in the construction materials space in the Missouri market. Alongside that, the acquisition at a stroke diversifies our US business from being very focused on residential house building, very focused on ready-mix concrete, to being a much more infrastructure-based business. And if you look at the rest of the BREEDON group, our focus tends to be on being infrastructure-led. In terms of synergy opportunities, we're targeting those $3 million that should come through over the course of the next 3 years. And those are very much what I would call hard synergies, so i.e. costs that we have identified that will not need to recur under BREEDON/BMC ownership. Over the course of those 3 years, those synergies will come in roughly 50% in 2026 and 50% in 2027. And then there may well be further opportunities for growth on top of that as we vertically integrate the businesses.
Thank you. Question here around, I guess, different expansion verticals. Are there any plans to expand your presence into high growth sectors like data centers, renewable energy infrastructure, or commercial real estate?
Yeah, we have exposure into all those sectors. Energy infrastructure. I mean, for us, whether it's new nuclear or whether it's onshore or offshore, wind. We have been involved and we continue to be involved. We have a good business and a strong business up in Scotland, and for new onshore wind or further offshore wind, we're very well placed. And some of the inquiries and some of the prospects that we're looking at now, could be quite rewarding to BREEDON, over the next few years. I think in terms of new nuclear, it's not only high-profile projects like Sizewell C. There's also the need for modular nuclear, and there's a lot of other areas as well. I would say out of all those areas that you touched on in that question, it's probably the commercial that's probably the weakest at this stage. But it doesn't mean that if that sector improves that we wouldn't be able to participate.
Thank you. Question from Gavin. Thank you, Gavin. Is the US servicing business a regional political thing? How do you reach adjacent territories if so?
So I would say it's a regional business, but I'm not sure what you mean by political. But it will be public authority led, just like our work in England is with National Highways and our work in Scotland is with Transport Scotland. Most of that work will be on trunk roads in Missouri, where the major part of the business is, and it will be with what's called MoDOT, which is the Missouri Department of Transport. But the positive is that as well as the federal funding through the IIJA and a number of other acts that have been passed, in Missouri there's also a gas tax, and the proceeds from that are ring fenced for spending on the highways, and the outlook and the forecasts for the next few years are really quite strong for Missouri.
Thank you. Got three questions in one from Mike. Thank you, Mike, for your question. In the US, given the new exposure is weighted heavily to infrastructure and non-resi, do you anticipate future M&A to largely follow this new pro forma mix? Can you discuss plans on where you see US contribution to earnings within the group over the next 3 to 5 years? And then lastly, where is a comfortable level for leverage for the right acquisition?
So I think in terms of the general profile of our US business, we would expect that to be maintained on the sort of structure that you've seen following the announcement of the acquisition of Lionmark. That's not to say that the next acquisition might not be another ready-mix concrete business, but over time, I would expect that infrastructure exposure to remain around 50% of our end market exposure. I think in terms of the size of the group and the size of the aspiration in the US, Andy Arnold, who's the MD of our US business, at the Capital Markets event back in November, expressed an aspiration to grow a division of BREEDON that would be the equivalent size of the Great Britain and Irish business combined. In announcing the acquisition of Lionmark, we're already at a size in the US on a pro forma basis, which is the equivalent size of our Irish business. Finally, with respect to leverage on a pro forma basis on the day of announcement is 1.9 times. We will see some natural deleveraging over the balance of 2025 of between a quarter and a third of EBITDA, which gives us a degree of balance sheet flexibility. We would take leverage a little bit above our target range of 1 to 2 times for the right transaction, but always with a view to deleveraging in relatively quick order thereafter.
Thank you. And I think this is the final question we have from Gavin. Had BMC and Lionmark spoken before, being so local, and why was it you that has merged them?
They did know each other, and it was interesting. But even in the early days after we'd announced BMC, I know that Andy was talking to the team there. It's an interesting question. One of the reasons that BMC became available was that the previous vendor ultimately had decided that he didn't want to put more capital at risk. And I think given the size of Lionmark, I think it would have been hard for them to find the equity and the debt to be able to do that. And it wasn't something that the previous owner wanted to do. I think when we came in, that changed that because it gave access to capital. And I think when they met each other, and over the last few months, as James and I have got to know the Lionmark team well, it became quite clear that there was an opportunity for them to join the BREEDON team and help us start to build something really quite exciting in the Midwest.
Great. Rob, James, thank you very much indeed. That's taken care of all the questions from investors. If any more questions do come through, we'll make those available post today's meeting. Rob, James, I know investor feedback will be important to you both, and I'll shortly redirect those on the call to give you their thoughts and their expectations. But before doing so, if I could, just come back to you for a couple of closing comments.
No, well, look, thank you everyone for joining us this afternoon. As I said, a good 24. Not just the numbers, but on strategic progress. And really with the Lionmark acquisition, we're really quite optimistic now that we've got a great platform to build out from in the years ahead in the US. And, we are incredibly excited about the future.
That's great. Rob, James, thank you very much indeed for updating investors. If I could please ask investors not to close this session, as we'll now automatically redirect you for the opportunity to provide your feedback in order that the company can better understand your views and expectations. This may take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of BREEDON Group PLC, we'd like to thank you for attending today's webinar, and good afternoon to you all.